Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a live trading room open. Weekly strategy roundtable open to talk about current market conditions, the outlook in 25. Sorry, we're in 2025 now, and short-term volatility, and what are the main themes going into this year, and what we can expect. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Andre, Christopher, Homier, Joseph, Mark, Patrick, Rodney, Thomas, Bill. Welcome. This is my brief bio for those of you who are new. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers. My background is technology, right? I was the CTO of several publicly traded companies here in Chicago in fintech space, worked for hedge funds, for broker dealers, Options Express from the beginning of my career that shaped my gravitation towards stock and options. And then we partnered with Keith, who's now doing live trading room. And we together have a new service, paid service. So I'm pretty excited about that. He brings a lot of mathematical background, a lot of market maker background. So he's an expert in options trading as well. So this is great. Disclosures are very important. Trading stock and options involve risk. If this is the first time you're seeing this slide, I encourage you to visit the optionsclearing.com link to understand the risk associated with trading stock or options. And the remaining of disclosure basically says that I'm not an advisor, and I'm here to show you what I do in my own account based on my own risk tolerance level for general education and information purposes only. All right, before we jump into a trading plan, let's talk about market condition, what to expect. So looking at the stock forecast toolbox, this is one of our main models. You can see that for the next 10 days, right, we have unemployment data next Friday, and we have start of the next earnings season. And you can see that the spiders is a neutral kind of range. We've been trading between 580 and I would say 600. And I agree with the model that in the next 10 days, something has to happen for the market to get out of the 580 to 600 level. It actually see potentially 570, that the risk, at least model sees the risk to the downside. Yes, we can revisit 600 in the next 10 days, but we could break through 580 and visit 570, right? So model, I would say based on these numbers, slightly bearish, and can see a potential break below 580 level. January 17th, this is in 2 weeks. We have January expiration, right? This is January expiration of VIX and equity expiration. And usually if there's any negative catalysts around the VIX and equity expiration, you could have a pull back to the downside. So if we see 570, 565, I would not be surprised on the downside. If we see 600, 605 all-time high, I also would not be surprised, right? So, but for now, we're trading in the range, not a lot of bias in the model. If I zoom out into 6 months, same model, right? This is using neural networks and latest advances in AI. It basically also shows that the trend is deteriorating, right? The momentum behind the bulls is definitely deteriorating. We saw, when we went into December, we saw, I think, 12% momentum for the next 6 months. Now I only see 3% momentum going into the next 6 months. Basically saying, I mean, we could see new highs, going into April, May, we could see new highs, as high as 650. So that's also not out of the question. But as you see in the past 10 days, we could see, basically on long-term trend, it doesn't see momentum below 586. But now that in January and end of December, we did have a pullback, I think 565 would be the next level. But basically the long-term model that looks the momentum from the long-term perspective, that although the momentum is deteriorating, we could have 6% rally in the next 6 months, right? So that makes sense. I also use other indicators to make prediction. maybe not into the 6 months, but let's look into weekly expiration, January and February expiration, right? Demand for puts and calls, right? Where the open strikes, how are people opposition, right? You can see in terms of gamma for January expiration, we have around $6 billion, right? Total gamma, which is in historical terms is not high, but in the past few months, it's 50% higher. We were at 4 billion, now we're at 6 billion. But that expiration comes in the next 2 weeks, and February expiration is still very low, 1.5 billion. So most of the gamma resides in the January contracts in the next 2 weeks. That's why January, all these option expirations kind of opens the window for positive or negative catalysts that can push market one way or the other. It does see, you do see pretty high. So let's remove the. Let me just remove January. We'll just leave January, February. Let's see, March quarterlies also could be important. Yeah, for now, not a lot in March. Okay, but you can see that there is a large position, right? A lot of people are been trading 600, 605 strikes, right? We talked about that in November and December, where I said that you could see 600, you can see 610, 615. This is where there were a lot of high open interest in strikes. But then you need positive catalyst to break through the 600, 615 range. We didn't. On the downside, right now we see 570, 575, just like the 10-day prediction also shows that potentially on the downside we have 570, 575 levels. So based on the news, when you look at the January, February expiration, we could be at 570, we could be at 610, right? This is optimistic. 600, 610, all-time highs, revisiting all-time highs, or continue to break through the 50-day moving average, right? If you look at the spiders, continue to break below 50-day moving average. We've been trending below 50-day moving average for a few weeks, which is negative. And sometimes if there isn't any negative news like unemployment data all of a sudden rises, or geopolitical risks, or earnings maybe not as strong as everybody anticipated, and then we could drop to 565, which is back to July highs, July, August highs. So right now we're trading in the range. I would keep an eye on 580. If the 580 doesn't hold, then the next level would be 565. So that's the range that the market is trading. What are the key metrics that I'm looking for? Is definitely interest rates, right? Interest rates after the new administration, right after the Trump start, the odds of new administration has increased. So has the yield, with the perception that the new administration will impose higher tariffs, right? That immigration policies will change, and that's net inflationary, right? The inflation will increase. So you see from 370 to 470 in a very short period of time, which is net negative for the market, right? Higher interest rates. Same thing you can see in the dollar, right? Dollar continues to rally from 100 to 109, right? And when company's going to start announcing earnings for the October, for the Q4 of last year, if you miss the earnings, most likely the excuse on these multinational companies will be that the dollar is strong, right? And they're deriving less revenue outside of the United States. So that continues to be negative. Bitcoin is another proxy for risk taking. It did break through 100,000 level, right? We were as high as 110,000, right? But now we're below 100,000, and also kind of consolidating. So this is a reflection of what's going on in the market, that people are not taking risk, excessive risk. And as long as we're below 100,000, then we're still susceptible for these pullbacks. Crude oil is one of the stronger asset classes. Start of the year, you could see a pretty large rally from 68 to 73. And that rally continues from the oversold levels in energy last year. So energy continues to grind higher. NVIDIA started the year with a strong move to the upside. and probably above average volume. So that's positive for the market that NVIDIA kind of continues to, well, consolidated and now rebounding going into the earnings season. And then what else? We talked about Bitcoin. China has been weak, right? China has been weak. Europe has been extremely weak, right? You can see Euro at 2022 levels, the multi-year lows. So that's also bearish, right? And I think currency market and the treasury market is going to have more influence on the market than move in NVIDIA, right? So that's the trend analysis. So let's look at spiders, right? We've seen that basically based on 2 standard deviation move, right? Supply and demand for options for January, February, which is usually good indicator of the range where the stock market is trading, right? 610, right? This is kind of your upper 2 standard deviation move by going into February, right? So by the end of the earnings season, we could be at 610, 615, right? That's one support level. We've seen 570, 565, right? This level, right? So scenario number 1, we're going to move 2 standard deviation, right? Just because demand for options says 1 standard deviation. This is based on the current volatility, which is slightly elevated, but off the highs, right? We were at 25, 28 print on December, 28 print. So still, but not at 13 where we were in November. So one, earnings season is better than expected, right? We have Pelletier, NVIDIA continues to make money, Microsoft, Google oversold, bounce back. Dollar is overbought, yield is overbought. If the inflation continues to subside, if people have jobs and strong consumer is reflected in the earnings of credit cards and retail, then we have one, right? We're making new highs in February. By the end of the earnings season, we'll be at 620, 630, right? That's scenario number 1. Scenario number 2, there's evidence that housing market is cooling, credit card defaults are rising, earnings season might not be as strong as everybody anticipated. New administration, maybe strikes, right? January 15th, the strikes at the US ports on West Coast and East Coast, they expire. Maybe we have strikes in ports. Apple has to slash their prices. So Apple is down. Tesla missed delivery numbers for 24, and that trend translates into other companies. And we're trading in a range, right? In this range, multi-month since July, kind of scenario number 2. Scenario number 3, employment is not cooling, but kind of rising, right? Companies are actually, there's evidence that companies are starting letting go people, right? And more recessionary pressures, right? And then we have scenario number 3, right? That stock is, this level doesn't hold. So those are the 3 scenarios that the market can have, right? And as a trader or as an investor, you need to have an outlook on the market, right? Which way are we heading? So going into February, how many of you think we're going to be, the results are going to be better? Still strong consumer. Everybody who wants a job has a job. People are traveling. They're spending money on airlines. They're spending money on credit cards. Christmas season and Black Friday was one of the strongest retail sales online, and we're going to 1, right? New highs. Scenario number 2, still a choppy market, overbought, right? The main argument behind the bears is that we have a wall of worry, right? I was bearish in 24. at least in the beginning of 24. I was bearish in 23. A lot of people were bearish in 23. 24 was the fear that inflation is going to be out of control and the recession will hit the recession. But we were able to climb the wall of worry, and that's where the money on the sidelines would come in to push the market higher. Now, Vlad is bullish. Everybody's bullish. You can't, Morgan Stanley capitulated, right? All the bears for the past few years kind of capitulated, right? There are no bears left in the market, and when you don't have that wall of worry to climb, that's when you start, and S&P evaluations are at historical highs, right? This is where it opens the door, and people are not hedging, right? People are not buying spiders puts. This is where you could have these 10, 15% pullbacks, right? And it doesn't take much, right? It doesn't take much. Well, not much, but things like instead of 4 interest rate cuts, now you only have 2 interest rate cuts, or maybe next meeting they're going to say 0 interest rate cuts. Then that's when you can see these, larger pullbacks. So, that's, scenario 2, trades in the range, scenario 3, higher. So how many of you say 1? November 6th gap, yeah, we're kind of right at the Joseph question. Do we need to fill for the? I mean, we have to get above 50-day moving average, right? For the bulls to get excited, we have to fill the gap, which we do, right? That's kind of been the overhead resistance. We need to jump above, 200-day moving average, 50-day moving average. I would say above 600. I mean, better than ideally, but for the bull market, for the bull trend to resume, we have to get above 610. But at least to be neutral, we need to get to 600. Then I would say neutral, because right now we're not bearish, right? We're making new lows, right? Lower highs and, retesting this level, right? So for now, this is still a descending triangle. Right, so for the descending triangle, usually is a bearish price pattern that results to the downside, right, on the above average volume, right, 70% of the time, right, and sometimes it breaks to the upside. Right, you can kind of see NVIDIA, right, descending triangle, but now it results to the upside, right? So assuming that it stays at this level today and Monday, then next move in NVIDIA is 150. But that's just NVIDIA. Spiders and QQQ are still bearish, right? Spiders below 50-day moving average. QQQ right at the 50-day moving average. So how many of you say 1, 2, and 3? So Christopher, let's see. Given the model prediction in Gamma, I'm tempted to buy puts and SPY with 2-3 weeks. Is that what prediction model is showing? I would hedge. So the question is, is this the time to hedge? I can't, what I'm doing is I am hedging, right? So in the past 7 days, I'm really not adding to my longs, but I have a small Tesla position. I bought a put spread, 350, 340 put spread in Tesla. I opened January put spread. I also closed it for a profit, and now I opened February put spread. So I am buying. I close in January because they expire in 2 weeks and market is choppy, so you can't really tell. But February, I am concerned that Q1 is actually going to be weaker, right? So I think my answer is 2, right? So I went with 2. I think we're going to trade in this range for the next couple months, right? And this is what, 10% pullback? $7 pullback. I mean, 7 to 10% pullback. It's not out of ordinary, right? That 10% would be 200-day moving average. So this is not something that's especially with the current market setup where dollar is very strong and yield is very strong. You just need a couple more negative news like Tesla and Apple, and market could continue to pull back. So I'm going with scenario 2, so it does make sense to hedge. 2, Renata, Andrei 2. Everybody said 2. BJ 3. Okay. Well, I have a lot of people today. That's great. And beginning of the year. Well, thank you. So yeah, so the answer is it makes sense to hedge, right? For now, bears are in control, right? I wouldn't even say it's market neutral, especially in value stocks. The good news, the value stocks are already 200-day moving average. They already had their, 8% pullback, right, to 200-day moving average. So if spiders pull back 8% and follows along, right, then this is kind of would not be too big of a surprise. And QQQ pierced through the 50-day moving average yesterday, right? It kind of retested this July highs. If QQQ breaks through the lows, right, it breaks through the 500 level, I think we could have that 7 to 10% pullback in S&P as well. The good news is that value stocks, I think Fred asked this question, dollar is at 109. Why don't value stocks continue to sell off? And that's a good question, right? It means that this sell-off is probably overdone and 200-day moving average has been a strong support. So this makes sense to start buying your value stocks, right? Your Citigroup, I have a Citigroup position. I have some utilities, SRE. I have OKE, right? Energy names. So they're all kind of grinding higher and rebounding from these oversold conditions. Technology stocks are overbought and they just starting to pull back. So you can see that Apple had a strong pullback into July level, right? Kind of following QQQ. Tesla had more meaningful pullback. They missed the delivery numbers. So it went from 500 to 380 in a short period of time. So it needs, market needs time to kind of digest this news. Any questions on? So expect volatility. I think 25 net will be higher than this, right? We were 28 in December, but most of the 24. I mean, we had big pull, pretty sharp rise in VIX in August, right? Again, right after the expiration, right? So this was the July expiration. We got into the August. Then we had a pretty sharp jump in VIX again on December expiration, right? This is, let's see. It started was the July expiration, right? So July expiration, we jumped to 17 and then all the way to, I don't think it was 60, but 36. So we had one big event, volatility move in August and one in December. So I think in 25 we'll have more of these peaks, right? More often than in 24. 25 will be more volatile. Any questions? All right, so what do we do at Tradespoon? So we have different services, right? I cover some of them. Stock Forecast Toolbox, I think, is a great tool, right? It's been very helpful throughout the years to kind of see, 1 hour trends, 10-day trends, 6 months trends. So you could, if you're short-term or long-term trader, you can see that if we reach 592, probably the market is overbought, right? And you can see, let's say today, spiders, right? And this is prediction from yesterday. It basically finds these key support and resistance levels, right? So every time we touch 592, market pulls back. Right, every time we touch 582, market rallies. So model basically shows you that. And if you're a short-term aggressive trader or if you're a long-term trader, you kind of tell if you're buying at 592, you're probably overpaying. right? But if you buy in at 582, that's a fair price, right? If you want to go bullish, and it's a big difference, right? 10 points, it's 1.5% difference, right? So if you can save that 1.5% when you enter position or exit, or if you're doing day trading, this is what I would look for. This is what, you know, you can type in spiders, you can type QQQ, small caps, NVIDIA, individual stocks. It works the same way, right? Basically tells you nobody has an upper hand, right now. And we've been just trading between these two ranges, right? So that's Stock Forecast Toolbox. You can look at Company Screener. Basically tells you, it runs every beginning of the month, right, on the first, and tells you, you know, which sectors are leading the market. You know, some of the conglomerates, right, in General Electrics of the world, Microsoft of the world, some of the financial services, right, Citigroup, Goldman Sachs is leading. Energy is lagging, right? Semiconductors are leading, like NVIDIA, with some of the electronic stocks. Insurance have been in strong uptrend. Internet stocks, like Microsoft, has been in strong uptrend as well. PayPal is in strong uptrend. So this is, this is the Stock Forecast Toolbox. You can look at the company screener, you can look at the, you know, you can enter your stocks that you want to trade to find your support and resistance levels on a daily basis. So that's Stock Forecast Toolbox. Active Trader is basically based on our internal models, not just Stock Forecast Toolbox, but just based on internal models that shows you which stocks were bullish or bearish, right? So today there are no bullish stocks, but there are bearish stocks like General Motors, right? So if you want to short a stock and you're looking to short a stock, you know, maybe General Motors. I mean, it continues to grind lower, but we do give you main support and resistance, right? So if you see the stock at 51.37 or 53.75, this is time to maybe a short. Right? So it's 51.15, 51, was it 51.37? Let's see this morning. I mean, it opened at 51.15, just dropped right away. So now, as you 51.30, if you see that 51.37, now it's 51.50. This is potentially one entry point to short the stock. The second entry point would be 51.63, or you could wait for prediction, right? Because market is volatile, it could get to 53.75, right? So that basically tells you based on the market conditions. Right? Spider is higher today, it's trading higher. Maybe if the spider gets to 592, only then you short. Right? But we're getting to those levels where if you know you would wait. I would wait 15 minutes, right? And once it starts to pull back, you can potentially squeeze that 1%, 0.5% pullback if you're doing day trading. So that's active trader, right? You have bullish and bearish ideas, and you would have to manage them. We do give you suggested entry price and exit prices, but you have to make a decision, right? Whether at 51.50 you want to go short. In a live trading room, you can ask questions. We do have a live trading room in Elite Circle. There's morning bell and closing bell, and I can tell you like how if I want to go short, this is what I would do, right? I would basically say, you know, yeah, if spiders is not breaking through, this is the time to potentially start thinking about shorting. You know, as long as we trade below 592 level, right? This gap. So that's active trader. You have bullish and bearish ideas. We haven't had bullish ideas lately. You can also do the same trade using options, right? If you want to have limited risk, you can buy weekly options, right? 55 put. Right? You just buy 55 put that expires today, right? Or you can go to the next week and you buy a put, right? $1.25 or 365. So that's active trader. Any questions on active trader? A lot of people. Andre, BJ, Carl, Christopher, Chuck, Hamir, Horizon, Joseph, Mark, Pam, Patrick, Peter, Rack, Renata, Tad, Thomas, Bill, Y. Welcome back, everybody. Thank you, Christopher. So that's active trader. Weekly trader, monthly trader, these are the, again, signals that we provide. Weekly trader, active trader is every day. Weekly trader is on Sunday, along with monthly trader. Basically gives you bullish and bearish ideas. You know, this week it was Tesla. Before, I mean, it published on Sunday before the numbers came out. But Visa, right? It shows Visa, KMI, right? Visa and KMI, I think, did better than Tesla. Let's see how did Visa do. Yeah, Visa is still very strong, trading uptrend, healthy consumer. So credit cards are doing well, and energy names. Some of the energy names are also in strong uptrend, like KMI, right? So those are the signals that meant to last, you know, few weeks, right? Sometimes a few months, right? But usually the prediction is, you know, based on 2 to 5 days, right? 10-day vector. So I usually hold them for, you know, 1 or 2 weeks. Sometimes when you have these consolidation news, enter them and then the market doesn't go anywhere, then I would have to stay in the trade longer, right? Because the market is kind of choppy and trading in range. But still, the idea is not to have more than 4 positions. You know, don't trade all of the sticks. And I would encourage you to start with just 4 positions, no more than 2.5%, right? Because there's a lot of signals every week or every day, but you don't want to have more than 4 positions when you start trading, so you can control your drawdowns, right? The risk management is extremely important, and we talk about this in live trading room as well. So I encourage you to read these notes, and these are the pick signals. We do have different tools like seasonal chart that shows you that, you know, I mean, January, February is usually volatile, right? January, February is usually volatile. So expect, you know, these pullbacks. And usually March, April, you know, you have strong uptrend in the market. So that's seasonality. Same thing, you can have probability calculator. Basically showing you the same thing, right? 76% of the time in the next 50 days, we'll be trading somewhere at 600 or at 575, right? So, and right now the model is mixed signal, right? You know, 2 predictions higher, 2 predictions lower, shows you the accuracy, the probability. So, you know, this model is also not very bullish on the market, basically saying we're trading in this range. So that's the research. We have some screeners if you need more trade ideas. What else? Elite Circle, right? This is where I actually trade. You have morning bell, closing bell, and you can see all of the trades, right? I'm trying to close PayPal position. I added Tesla. It's a mixture. Some of it options, some of it stocks. It's not always just options. People ask me, is it always options? You know, sometimes I trade individual stocks like Tesla. Sometimes I trade options. So you have a mixture of both. You can see all of the orders. You can see all of the positions. You can enter an alert under SMS and type in your phone number, and then you get your live trading alerts. And then this trader log available real time, right? It's synchronized. These are not hypothetical trades. These are actually trades that I do in the broker dealer, and you know, synchronized real time. So you get these real time alerts from Elite Circle. Premium is where I only trade spreads. But again, I like QQQ. I trade spreads. This is a spread that I put on, but you can just buy, if you're not comfortable trading spreads, you can just buy a put, or you can sell short stock or buy PSQ, right? It's up to you how you want to trade these signals. And you have a video explaining how to enter these positions. So you can learn. This is a great way to learn how to trade options, right? You get a video, it explains you what the mechanics of the trade are, and then you have your choice, stock, option, or option spread. So that's premium portfolio. Robo Investor is where I trade stocks. Same thing, you have orders, positions, you get email, SMS message every time I trade. This is stocks only. And here you can see all the stocks traders. one trade idea every other week, and this is what I try to keep. I mean, the number of stocks, this is meant to be longer term. The number of stocks, I think now what we have, 10. We have 10 positions in the portfolio. Right? Small cap, Amazon, Tesla, stuff like that. Any questions? So that's a robo-investor. We have Shadow Trader. This is you just following my trades like Elite Circle. Elite Circle gives you access to all of our tools. Shadow Trader, you just see my trades. Spread Trader is similar to Premium Portfolio. This is just spread trades. And this is what we offer. We do have a YouTube channel, so you can join us live in the live training room every Wednesday. I encourage you to sign up. Hit the subscribe button. We're trying to grow our audience, so appreciate if you hit subscribe or share the videos. That would be very useful. And we do have a lot of free content, right? Newsletter gets published every Monday. We have a video every Tuesday, and then we do have a Robo Street every Thursday. So you have different free newsletters you can sign up for. We have recordings, right? You can learn if you want to learn about options, right? You can type in options. We'll show you all of the webinars on options trading. Trading room recordings, we have the strategy roundtable where now you can see them. We have learning center where you can actually find more information on basics of trading, options basics, technical analysis, advanced technical analysis, portfolio management, trade management, trading plan, money management, advanced options. So a lot of free content on how to trade and learn how to trade. And obviously it's a lot of information. I do encourage you, if you want to learn how to trade, one-on-one coaching, right? If you're still kind of learning and you have time and you have financial commitment, right? You have a larger portfolio, then I would definitely consider one-on-one coaching. Any other questions? Active trading for Christopher. Yes, so if you have a trading plan and you've been trading, these are definitely good signals based on AI that generated. Some of these signals are actually trade in the live trading room. And I know a lot of people, especially that are experienced traders, use this religiously, right? We have people that have been using it for 10, 12 years and they kind of live by it. And, if there was a split that we missed, I get emails right away, well, why is P&W not updated, right? I'm like, oh my God. So yeah, you have to keep an eye, make sure that if there's a split, there's no gaps. Now there's no gaps. So if you were trading Palo Alto, right, and you want some security stocks, like we have one subscriber, right, then, this will definitely help you with these guidelines, right? The trend, short-term trend, neutral, 10-day trend. Sorry, where's P&W? Here. 10-day neutral and P&W, 6 months, bullish, right? You have your support and resistance levels, and active trader signals, they do usually outperform the market, right? They do outperform the market over this segment. Bob is back. Welcome, Bob. Thank you for coming. We have a lot of people today, a lot more than usual. Everybody's ready for the new year. All right, so it's 10:12. Any questions? So trading plan in the live trading room, I talk about the trading plan and just quickly want to go over it. It's all about risk management, right? Especially if you expect volatility to rise. Yeah, last year we didn't, it was in the last 2 years we had, best performance in S&P in the past 25 years, right? So 23 and 24 were the best 2 years back to back, over 20% return, better than 2009, 2010, right? So we definitely have a very strong bonds market. Is overbought. So you can expect that the next 2 years we're also going to be 20% return, kind of one-way trade. So that means maybe it's not the end of the bull market. and the bull market obviously can continue, and it still continues as long as the macroeconomic data supports it. But that means that volatility can persist, right? And we could have choppy trading like we had in December, right? Everybody expected Christmas rally, December is going to be strong, and it didn't, right? So it's very hard to predict the timing of these pullbacks. But when they do occur, and as long as you believe that the market is an uptrend, then risk management, you need cash, right? You need cash on pullbacks to deploy your cash, and you need to manage how much your portfolio can pull back, right? If the market pulls back 10% and you're down 10%, that's okay, right? If the market is down 10%, you're down 20%, that might be too big of a drawdown, especially if you're new to trading, right? So looking at your portfolio beta, looking at correlation of your portfolio with S&P, very important. That's why I always say, well, 4 positions, 2.5% maximum risk. Some of the other, parts of the trading plan we talked about in the live trading room. You guys can view it. Trading psychology is important. We have yellow tunnel, concentrating more on trading psychology and important topics. So I encourage you to view that as well. All right, any other questions? Strike to cash secure put, low range for NVIDIA over the next 2 months. Yeah, Chuck, I think the best tool for that, I mean, obviously I would look at the stock forecast toolbox, right? So I would type in NVIDIA. Chuck likes to sell cash secure puts. So if you have larger portfolio, you can afford getting a sign on NVIDIA, right? $14,000, right? You can trade, you can sell naked puts if you have $10,000 portfolio on NVIDIA. If you have $100,000 or $200,000, okay, then you can sell cash secure put. So 10-day turning positive, 6 months, still positive. So model is bullish on NVIDIA. NVIDIA has been consolidating for quite some time, right? It hasn't really gone anywhere since July, right? So it's been a very long kind of consolidation. Still in uptrend, it's still a pattern of higher highs and higher lows. So the question is, in the next 2 months, where do you see support and resistance? So I go to, looking at the option positions, right? Doesn't matter what I think, what do the people think, right? The same thing, I would go into, the question was 2 months. So let's go February and March. I'll do January too. Well, if it's 2 months, let's remove the January because a lot of the position is in January. So let's look at February 21, March 21 positioning. So obviously it has to escape 140 strike, and looks like it is escaping. One day doesn't set the trend, but if today we're at the 143 and Friday we're above 140, the next level is 150, all-time high, and then people are already buying 160, right? So obviously very bullish stock. So people are buying calls, right, or selling calls in this example, most likely. No, in this case, probably buying calls. So 160, NVIDIA usually, call skew, not a put skew. So 160, 150 is your overhead resistance. On the downside, you do have large position 130, 125, 120. So I would pick one of these strikes because this is one standard deviation move, especially if you're doing 2 months. When is NVIDIA earnings? Usually it's later, right? NVIDIA earnings, it was what? November, end of November, end of December, January. So it's going to be end of February. So we're probably so February 19, right? So you basically, if you sell in February contracts, you're taking the risk of earnings. You're taking the risk of earnings. And on average, 8% move in the past 4 quarters. Average NVIDIA move was 8%, right? So it makes sense, I would say one of these strikes, right? Well, looks like the highest gamma is in 125. So I would sell 125 strike. 40 million gamma is in 125 strike. 125, 130. So those are the strikes I would sell. This is one standard deviation move, and it will take you to recent lows, right? 130, 125 is where your recent lows are. So Chuck, hopefully that helps. 3 bullish days, resistance breakout. Well, so the question is, Bob asked, what's my opinion when the pullback is over? I think the most important parameter is the yield and dollar. I mean, they kind of go in hand. As long as the dollar stays, I mean, the breakout is actually at 106, let's call it 106, right? Dollar has to drop below this breakout level, right? 106.20, 106. The 10-year yield, which is probably more important, has to drop below 4.5. As long as we are trading above 50-day moving average on 10-year yield and the dollar, I don't think the market can continue going higher, right? Even if we do jump to, 600, 610, all it means is that we're still going to pull back. Right now, this uptrend is broken, right, in S&P and in QQQ. So I think we need pullback in yield. So I think yield is more important than the dollar. And that could be, there are usually two data points that influences us, or 3 data points. One is something that Powell says, right? Powell could be hawkish or dovish, right? One of the reasons the yield rises, one of the reasons was administration, right? New administration. So if there's new announcements on tariffs or immigration policies that will be starting to enforce in the near term, yield could continue going higher. So there are different things. So you have macroeconomic data, and you have new policies that can push the market yield higher and the market lower. So I would trade what I see, and what I see is that yield is elevated and staying elevated. So until we pull back below 450, ideally 440, I think it's a pattern of lower highs and lower lows. So that would be my trigger to get more aggressive on the upside. And you can see we did pull back to 450 for 2 days, and right back to 460. So you need at least 2 to 3 days of below 450 to kind of have any meaningful rally. Maybe it's unemployment data next Friday, maybe it's earnings season, maybe Trump says something that's he's not going to impose 60% tariffs on China, something along those lines. Chuck, thank you. Gold. I mean, gold started, strong, as long as yield. I mean, it did pull back with the yield, but it's also overbought. So I think gold is still trading in an uptrend, right? I mean, it did break through it marginally, it's still trading, but I think, as long as the yield higher, and there's a reason why Fed changing their view that instead of 4 rate cuts, now it's only 2 rate cuts. They do see something is not right in the economy, right? The economy is cooling. Maybe it's the housing data that worries them. Maybe it's number of, credit card defaults or student debt. I don't know exactly. I'm not a macroeconomist, but there's a reason why they think they need to stay in restrictive environment longer, right? So I think as long as that uncertainty stays, I think gold, silver continues to grind higher. Definitely earnings, yes. A lot of the market moves are driven by earnings, right? So if market comes out, if the earnings are better than expected, and we have, earnings projections it's going to start increasing, then the multiple, S&P multiple, is also going to continue to expand. So we have a lot of new catalysts, and January is usually volatile, right? You can see our seasonality shows that January is volatile, and you know, if you look at bar chart individual months, right, in January, usually bullish, right? One of the better months, right? One of the strongest months are January. But obviously, when there's the recession, 22, there's a big pullback. If something happens, you know, in China, you could have big pullbacks. So, you know, you definitely, it's not a one-way trade. If something happens in the market, you could have big pullbacks. If nothing happens in the market, then usually it's bullish. And we'll see what 2025 will look like. This is NVIDIA, sorry about, this is NVIDIA, okay. I'm like, this doesn't make sense. So, yeah, so usually January is bullish. Spiders, sorry. 0.9. But same thing, just like NVIDIA 2022, the recession was bearish. When you have China scare or, you know, interest rates in Europe, you could have these pullbacks. All right, guys, that's all I have for today. Thank you very much, you guys. Crypto, yes, crypto is also very good proxy for risk taking. So I'm watching high yield, right? High yield below 200-day moving average. Oh no, wait, sorry. Weekly chart, let's do 1 day. So it's below 50-day moving average. It did pierce through 200-day moving average, right? So you have a widening of this credit spreads. That's not good for the market. And we need to get above 50-day moving average, right? But it did bounce back, right? It's trying to close this initial gap. So that's bearish. And yeah, Bitcoin needs to get above 100,000. And it's getting close, right? 98,000, almost 99,000. So Bitcoin is also a good proxy for risk taking. All right, guys, thank you very much and have a great day.